Hi, everyone. Thanks so much for coming. We'll start in about a minute here, and you'll see shortly I will launch a poll. If you enter your email, we'll go ahead and send you a free coffee for attending. Thanks so much for being here. Just give it a minute or two. Okay, it is 10:01 my time, so I think we'll go ahead and get started. Thanks, Kate, for helping me co-host here. And in case you've joined in the last minute or two, as Kate mentioned, we want to buy everyone who came live to this webinar a coffee today. So make sure to fill out the poll that she popped up there with your email address, and she'll get that sent over to you during or right after the webinar. So thanks, everyone, for being here. I'm Chelsea Treseder, one of the co-founders of MVP. And I am really grateful for the partnership that we have with Resound Accelerate and their collaboration in putting on the event today. Just a little bit of housekeeping before I get started. We are hoping to have some time at the end for Q&A. So if you have any questions that pop up during the event, you can pop those in the Q&A and we will cover those off at the end. We are recording, so we'll be able to send you a copy of this presentation later. If you're interested, you don't have to take copious notes. And with that, I think we'll get started. Okay, so here's what we're going to cover in the next hour or so. We're going to talk a little bit about what we're seeing happen in the industry here so far in 2026. Going to go back to basics a little bit and talk about, KPIs, business intelligence, what it is, what it isn't, what some of the advantages are to implementing business intelligence, particularly in a hearing care and audiology practice. And then hoping to leave some time for a little bit of a live demo of MVP and, of course, your questions as well. All right, so I thought I would start by telling a story that's from a real practice. So this practice historically had one large clinic and a number of other smaller clinics. And at the beginning of 2022, the practice acquired another large clinic. And it was actually, the acquired clinic was very similar in size to the largest pre-existing clinic that this practice had. So what that sets up is a really good kind of apples to apples comparison between the two. Those two clinics, those two largest clinics, the one they had and the one they had acquired, they were very similar. So pretty much the same size, same staff count, very similar markets in terms of demographics, similar services offered and things like that. And they are both very high revenue clinics. Pretty much anybody would be happy to have one clinic generating that amount of revenue. However, one of those clinics was working a lot harder for that same overall production level. And there is nothing in their day-to-day reporting that a normal practice would be looking at that would have told them that. So if you only looked at the surface, like I said, scheduling, patient mix, a number of staff, the clinics were basically twins. But there was one thing that popped out about the schedule that was different between the two. One was about 80% utilized when you were looking a week out, which, by the way, is a pretty good number. That means that, you're decently full, but you're not so full that you can't get in, high value opportunity appointments or emergencies or things like that. The other clinic was totally full looking 3 weeks out, which again, being full is a good thing, of course. However, if you're completely full looking 3 weeks out, you're probably missing opportunities. It just stands to reason. So when the owners dug into this a little bit further, what they were able to notice was that one of the clinics needed 20% more total appointments to generate just 4% more revenue. So like I said, they were very close when it came to, overall production. One generated 4% more revenue, but it took them an additional 1,000 appointments to get to that 4% increase in revenue. And that's part of what a standard reporting framework is going to miss completely. It might show you volume and even revenue, but it isn't going to connect the two for you in a way that's going to help you understand what's really underlying the production of a given business. So hold on to this one for a second. I'm going to come back to it later in the hour and talk about how you're able to answer why this was happening and make changes accordingly by using business intelligence to transform the way you look at your practice. So before we get into talking about business intelligence itself, I wanted to spend just a minute or so talking about why I think this conversation matters so much right now. Not really in the abstract, but in what we're seeing specifically in 2026. None of these things I'm going to talk about are reasons to panic. I personally am very bullish on the hearing care industry and private practice specifically. But I do think they help illustrate why having better visibility than some kind of monthly report is more important than it's ever been. So these are 5 trends that I think, when I look at the industry and the MVP data set, really rise to the top as the things that we should all be aware of and thinking about. So the first one has to do with patient demand. So new patient appointments turned soft towards the end of 2024 and continued that trend throughout 2025, and they've stayed soft. They are currently down about 4% year over year in 2026. Some of you who are here may have been following us for the last couple of years. You would know then that we do industry update webinars. We try to share data from the aggregated anonymized MVP data set as frequently as we can to help educate all the stakeholders in the market. So, of course, private practices are our primary target, but try to bring these types of industry insights to the market in real time so folks can be aware of what's happening and make adaptations as needed. This is a trend, again, we've been talking about since early 2025 when we first really noticed it in the data set. This, to me, is particularly concerning, interesting, whatever word you want to use, given that the 65 plus population keeps growing and we're really in like the glory days of the baby boomers aging into our target market of 65 plus. Also, when we look at the data, close rates across private practices are holding steady. So this isn't a sales problem. It's fewer people walking in the door in a time when we would expect more people to be walking in the door. Like when you look at I'm sure you guys have all seen them, baby boomer growth charts over time. Again, we're in the glory days. Even flat new patient growth would be disappointing. And we're actually seeing a decline. So it's a surprising trend and one that I think is probably the most important thing we should all have our eyes on right now. The second one are the changes we've seen in the last year or two with when it comes to managed care. So nationally, Medicare Advantage penetration rate just climbed year after year after year. I think it went from something like 36% to 51% over 8 years. But between 2024 and 2026, looking at the enrollment data, it's really flatlined. So that kind of land grab phase of Medicare Advantage having just year over year double-digit growth seems to have really stalled out. On top of that, and again, if you've followed us for the last year, you've heard us talk about this. We've had 2 ahistoric waves of planned terminations in both 2025 and 2026, which are pushing certain patients out of the Medicare Advantage framework, and they don't necessarily have an automatic transfer to a comparable plan. It's called terminated non-crosswalk plans. And if anybody wants to know more about that, reach out to me after. I can share a lot more detail with you on that I don't have time for today. But the point of it is what we're seeing here happen in private practices, which is that TPA units they were way down in 2025 and they're down again in 2026 and down versus a soft year in 2025. The other thing that we're noticing is that we are for the first time seeing more patients who were third-party patients converting into private pay patients than the opposite. So for the last however long we've been tracking it, 5-10 years, every single year we had more patients defecting from private pay patients into TPA patients in our data set. And we've finally seen a reversal this last year, which is noteworthy. Again, whether you are happy about this trend or disappointed in this trend will probably depend on your practice, your market, your business model, and what role managed care plays in it. But I think given the large impacts that changes in Medicare Advantage and managed care have had on almost all markets over the last decade, it's a noteworthy trend to keep our eyes on. Another thing I wanted to call out is the fact that we are continuing to see just incredible growth in existing patient sales in the MVP data set. And that's effectively what's keeping the total private pay business healthy. Since I mentioned before, new patient acquisition's been soft. So this is a real strength and something we're all relying on and leaning into. But if we're being honest, it's a cushion. You can only resell the same base so many times in our industry before that growth lever runs out. So while it's been great to see, and it's certainly good news, I think it also is important to keep an eye on, both market wide and, of course, in your individual practice. Competition. Costco at this point is something like 16% of the total US retail hearing aid market. And this is not just Costco in terms of what types of competition private practices are facing. We're seeing some signals that look like some of the companies that are closest to the Medicare Advantage funded benefits may be diversifying away from it a little bit and leaning a little bit more into building their own controlled retail channels. Anybody who follows industry news or is in the Facebook groups, is seeing this talked about. But I think, we're probably likely to see increased competition from other retail options for patients than we've seen even in years past, especially as, the Medicare Advantage growth seems to stabilize to a bit. And then finally, I don't think you can do any presentation today without talking about AI. So I just think, I'm not going to spend a ton of time on that today, but I know, all the practice owners I talk to are trying to figure out what role AI plays in their business, both from a clinical workflow standpoint, as well as how it, may fit into business processes. And I think there's a real onus on practice owners right now to start figuring out, not if they should use AI, but how and where, in a way that's going to benefit their patients and their practice. So lots of big picture things happening out there can feel a little bit overwhelming. But I think this sets the stage for why, understanding what's going on in your practice and your market is, in my opinion, kind of more important than it's ever been. So I wanted to talk about the mechanism behind a lot of what I'm going to talk about today, which I like to call lagging visibility. So, this I think is historically the way a lot of problems or changes surface in a practice. So something changes. It could be a referral source changes, a payer mix changes, something like that. And then, sometime later, usually maybe a couple weeks, it's going to show up in your volume. So that could be in new patients scheduled, in actual opportunities scheduled, opportunities completed, and that sort of thing. They're on the schedule, which we know is the greatest predictor for future production in a practice like, in the audiology space. Sometime later after that, depending on your business model, how long that lag is, it's going to show up in your revenue. So if you will have patients do take home test drives, if you're booked out 3 to 4 weeks, this shift happens, it's going to show up in volume, and it's not going to be likely till at least a couple of weeks, if not more, that you see this show up in your actual revenue and potentially on your P&L, depending on how often you and your accounting team are, looking at your books. And then finally, after that, you'll look at it and you'll see what happened, and you'll have to put together a plan to react to it and to correct it. So as you can imagine, this can take quite a bit of time depending on, exactly what's going on in each of these steps. But the real purpose of BI is to catch things here at step 1, so that it doesn't ever show up here in item 3. And you actually get to move this step 4 right up here, right as number 1 is taking place. Okay, so I wanted to spend a minute just because I think BI is like a buzzword to some extent that can get thrown around. And I think it's really important to understand what BI is and also what it isn't, and get really clear on the terminology. In terms of what BI is, this is a live, basically continuously updated view of how your business is performing. It also is not static. So it allows you to ask a question and then ask a follow-up question and then ask a different follow-up question, depending on what you uncover as you get the answers to your questions, which I think, anybody in conversation or any kind of time you're trying to learn or understand something, there's going to be follow-up questions, and you don't always know what the next one's going to be. It's going to depend on the answer to the last one. The other thing about BI is it's going to give you all kinds of different context, and I'll hopefully have a chance to show you that here in MVP, where you can compare to yourself in the past. You can compare to your average performance. You can compare to peers. You can compare to the market. So rather than just looking at any single performance metric, you're going to have a lot of different ways you can contextualize that performance. It's also designed to be an early warning system. So rather than just telling you what happened, it's going to help notify you when something small is shifting. Um, yeah. And so what it's not, I think a lot of people are under the impression that BI is just like a better looking version of a report. So like maybe you take an Excel spreadsheet and just create a visual out of it. And I think that really sells BI short. The point really isn't the format. It's the fact that it's continuously updated and the way the information is presented so that you can actually understand it and take action from it. It obviously doesn't replace any kind of clinical judgment or patient relationships. This is just a tool to understand what's happening so that you can then go do the actions that need to be done to improve the health of your business or your patient care. I think there's also sometimes a false pretense that a BI system is only for, super large corporate type entities. And, historically that actually was the case because BI is fairly complicated and expensive to build and maintain. But it's not the case that only very large entities can benefit from it. So, any business of any size can very much benefit from business intelligence. It also isn't just a one-time thing. It's not like, oh, you set it up and then you forget about it. It's something that you have to look at and ask questions of constantly in order for it to actually deliver on its promise of telling you what's going on. So I also think sometimes the terminology can be a little bit confusing. So I wanted to go through that quickly here. A metric is a number. So that could be your revenue. That could be your units, things you're certainly used to looking at and talking about. A KPI, that's just a metric that's specific and strategic for our industry. So I used to work in the dental industry and there would be something called chair time. That's not a KPI we really use in our industry or, not very often. Whereas something like conversion rate or revenue per hour, those are KPIs that are meaningful in our practices. So those, what's a KPI and what isn't will be very dependent on the industry, the practice, the context, the problem you're trying to solve. Reporting kind of answers what happened. So this is generally looking backward and saying, how much did we sell in June or what were our top referral sources in May? That would be reporting. Analytics kind of takes that to the next level and helps you understand why something was the way it was or is predicted to be what it is and what you could do about it. And business intelligence is really the world that brings all of this together. It's not just a report. It's really an operating layer that goes on top of everything else that you're doing to help you understand the merits of it and where you have opportunity to improve. So, this is what traditional KPI reporting has looked like. And to be honest, practices doing this historically, that was way better than the alternative, which was to do nothing. So looking at what happened, pulling static reports, checking them out monthly, looking at what's just happening inside your practice and comparing that to history. Again, having worked in this industry for almost 20 years now, practices doing this were better off than the ones who weren't doing it at all. They at least were looking at what was going on. But there's some problems with just looking at static reports once a month. And this will kind of tie back this first example to the story I told earlier. So that practice that was had those two locations that were generating the same revenue, but one had to see 1,000 more patients to do so. It turned out that they had totally different systems for managing clean-in checks. And the point of the story isn't to say one system is better than the other. That's going to, what system you use for that will be totally dependent on your given practice and your staffing and your patients and your automations and all of that you have in place. So please don't read into the details. But the point was one of their clinics was pre-booking appointments. Every time a patient left, they had a future appointment booked. The other practice was doing more of a raise your hand recall system. So they would invite patients to schedule a recall appointment with a postcard, an email, a phone call, a text, and let patients choose when to schedule those. And I think that the way the first clinic was doing it was really filling up the schedule because, again, they were insisting on every patient having an appointment before they left, which I know is a good practice in certain clinics and makes good sense. In the case of this clinic, they didn't have the space, they didn't have the staff to accommodate that. And what it was doing was causing them to miss opportunity appointments and work way harder to generate the same revenue that their sister clinic was able to generate with this other more on-demand, call it recall strategy. So again, not commenting on the merits of which one you should choose for your clinic, but understanding what system you have, the impacts that it's having in your business, and whether you'd like to make any changes to that. That's really the power of looking at things analytically in a business intelligence environment. Other things that you wouldn't be able to see in a static report. So you might be able to see referrals received, but you're not necessarily going to be able to connect that to performance of opportunities, units, or revenue. Great to get a ton of referrals, but if they're not converting into revenue, might be time to reevaluate. Your office management system or a report from it might be able to show you a full calendar. It's not going to be able to show you revenue per hour per patient type and how that differs by clinic, by provider, by referral source, et cetera. Again, to validate the productiveness and effectiveness of your team. You might be able to see what happened last month, but you won't be able to see, is your trend matching that of the market? Are you outperforming the market? Are you underperforming the market? Because of course, you're limited to the data that you can see in your own practice. So now I want to kind of pivot to talking about what's possible when you actually start to use BI and can go from just simply looking backward on occasion to actually growing forward every single day. So here's this same chart that I pulled up a few minutes ago, and now I've added a column on the right, which kind of compares the differences between what you get with static reporting versus what you get with dynamic business intelligence. So I kind of think the most important one is the one I have on the top there. So rather than just saying what happened, which is what you can do with a report, with BI, you can say what happened, why, and what should I do about it? It really pulls it through to the actionability. I'm not going to go through all of these, but again, it's updated automatically nightly. So instead of just once a month taking a look at what's happening when already much time may have passed since something changed, you're able to make decisions on the fly daily. Like I mentioned before, you're probably going to have multi-layered questions about what's happening in your business. A lot of these problems are super complicated, and I'll give some examples in a minute. But being able to do that kind of dynamic analysis where you don't have to pull new reports, everything's there for you. You can drill into it in a variety of different ways to get those questions answered in seconds, is really powerful. Being automatically alerted when things shift, I think is incredible too, especially, so many practice owners wear so many hats. You may be seeing patients. You're definitely managing the business. You're managing your team. Ideally, you'd log into your business intelligence tool and you'd look at it for 2 hours every day. I know that's not necessarily realistic. So being able to be told, hey, here are things that are changing. Here's things to watch out for, can really be almost like a personal assistant to you in all of those hats that you're wearing. Mentioned this a little bit, but with static traditional reporting, you're only really able to look at your own numbers. You may be able to gut check or validate against some friends who share with you or a practice development group or something like that. But being able to see what's happening live in the industry every single day is a really powerful way to contextualize your own performance and understand whether it's truly strong or not and where your opportunity areas are to grow. Okay. So I just wanted to give this metaphor really quick as a way to think about the difference between static reporting and business intelligence. So if you think about it as the difference between like a photograph and a video feed. So photograph, it's totally accurate the second it's taken, and then it's instantly out of date, right? If you try to come back to it, the world has moved on and that scene is no longer what it is. You can't ask a follow-up question. Whereas with business intelligence, the live feed, it's always current. You can rewind it, you can zoom in, you can ask it something new. And I think that kind of really helps to illustrate the difference in the power between these two things. And I'll be realistic. It's not that there aren't any negatives with business intelligence. It's definitely a rich, robust tool. So if you're used to just looking at spreadsheets, it might feel a little bit overwhelming. So there's a lot there to take in. And of course, you have to look at it. So a dashboard is amazing, but it doesn't actually do anything unless, you or someone on your team is there to go in, take a look, and make a point of understanding what it's telling you so that you can actually make changes that are going to move you closer to your goals. Okay, so I thought I would just kind of map out what a scenario might look like for somebody using more traditional static reporting versus somebody using a business intelligence tool. So let's say that, over the course of a week or two, you're able to notice that referral volume from one of your key sources drops 15%. You might start to feel it a little bit, but it's more just like an thought in the back of your mind. Potentially you're busy, you're moving on with other things. Come week 6, now that you're looking at your completed monthly report a week or two after the end of the month, you can see that your new patients are way down. And you need to dig into why. Maybe it takes another week or two to really identify the root cause and build out a plan. Say this was a physician that dropped off in the case of this example. Takes you a week or two to figure out which physician it was, put together a plan, and actually go out and call on that physician, meet with the referral coordinator, find out why they haven't been referring as much, et cetera, et cetera. And then maybe a few weeks later, you start seeing that referral pipeline bounce back. We're talking now almost 3 months from when the problem started to when you're actually seeing positive changes. And then what this can look like with the BI tool is just that timeline gets truncated way down. So you'll actually be flagged within a couple days that this referral source has dropped. So this is now a leading indicator, not so much a lagging one. By maybe the fifth day, you're able to drill in and see, okay, it's this physician. This is what I'm seeing happening. It's this medical practice, whatever it might be. A day or two later, you can go ahead and start that outreach. Get on the phone, drop by, whatever it's going to take. And then by week 4, once they've had time to update your contact information in their referral system or whatever the issue was, your volume has recovered. So now we're reducing that cost to your practice from something like 3 months down to something like 1 month. And I actually had this exact situation with a physician referral happen last month with a practice we work with, and it was incredible. And all it took was that one visit back in. They were referring to the wrong practice mistakenly. They did not intend to. And then sure enough, 3 referrals popped in the next day. So there was plenty of time wasted and missed patient opportunities, but at least it was caught much sooner than it would have been with traditional reporting. So I thought next I would just share a few examples of the types of ways business intelligence can be used in our practices specifically. Again, BI is used in every industry out there, and how it's used and what you're going to look at is going to depend on the industry and the context. But, I popped a few up on the screen here and I'll give you some examples, but things related to scheduling. So understanding booking delay trends before you're losing opportunity patients, understanding true provider utilization, and also the type of appointments that, because a provider can be 80% full, but if they're non-revenue generating appointments and your new patient opportunities are taking 4 weeks to get booked in, you got a problem here. So combining things like schedule utilization with percent of opportunities or percent of schedule being used towards opportunity appointments can be a critical way to understand the schedule. Understanding growth opportunities. So what kind of opportunity is there within your existing patient base and also within your broader market? Understanding your own pricing strategy and how it compares to your peers, I think is another just critical example of where BI can be very helpful in an audiology practice. Being able to do forecasting, so really accurately understand where you're likely to end the month, the quarter, even the year in real time, of course, then gives you that kind of leading indicator we've been talking about, where you have time to understand what's happening and make changes accordingly. The other thing I wanted to mention, in addition to just the types of KPIs that you can have access to in a business intelligence tool, is this contextualization piece I mentioned earlier. So again, is $500,000 in revenue a good number? Well, it depends. What time period are we talking about? How much revenue did you do last year? This would be this you versus you in the past thing, right? If you did 400 last year and you're doing 500 this year, that's great, right? How about you versus your goal? So maybe you did 400 last year, but your goal for this year was 600 and you're doing 500. Well, then maybe that's not so good a number. So being able to understand your performance in these different contexts is critical. And numbers 3 and 4 here are the ones that really only come alive with BI. You could, in theory, kind of do 1 and 2 on your own with some spreadsheets, be sort of cumbersome, et cetera. They obviously are much more powerful in a BI tool, but 3 and 4 were never possible before. So number 3 is being able to compare you to your peers. So is your ASP good for your market? Is your revenue per hour high or low? All those sorts of things. Being able to compare yourself to your peers, both nationally and regionally, empowers number 3 as a different way to measure yourself. And finally, 4, and this is a new feature in MVP 3.0, where you can actually compare yourself to the real-time market. So maybe you're up 5% year over year, but the market's up 10. You may have been sort of proud of yourself, but in all honesty, you're not even keeping pace with the market. You should be growing more. There's more opportunity for you out there. So again, giving yourself different ways to look at your own performance can help you really paint the full picture of how you're doing. Another thing I wanted to show here was just this market penetration chart. So It can be really great to have high market share. It can be really great to have high market penetration. But depending on whether you're high or low on each of those categories, if you don't know where you sit here, it can be hard to inform your growth strategy. So if you look down here for a practice with low penetration and low share, I mean, you're relatively undiscovered. So if you're a brand new practice, this is where you're going to start. If you've been operating for a while, you've got some work to do both on the awareness and on the conversion side. If you've got low penetration but high share, that means maybe you're new, but you've ramped up really quickly. Maybe you're a niche practice. You have, some specialty areas that you focus on. So here, you have a small audience, but you're really winning. So thinking about how you can grow that audience overall is where, likely you're going to win. This one is the one that and I'll give a case study example in a little bit, but that I think is really interesting when you have very high penetration but low share. So this would be a situation where your database is full. Like you've been operating a long time, you've done a lot of marketing, you know a lot of people and they know you, but you're not selling or, you're not treating as many patients as you could given how powerful your database looks. So we call this like the database trap. And again, I'll give you a case study here in a little bit that talks about this one. And then, of course, this is kind of where most growth-oriented practices want to be. You want to be widely known and consistently winning, where you've got high penetration, you know the people in your market, they know you, and you've got a compelling segment of that market who are choosing to do business with you. Okay, so I thought I would do next is just give some examples of the types of questions that I get from practice owners all the time and how a business intelligence tool can help you answer those questions. So this situation here, is my schedule full or is it actually productively full, is kind of the exact mechanism behind that story I told in the beginning. So once this practice looked at their opportunities as a percentage of booked hours, they saw that their extra appointments were primarily these kind of low value clean and check appointments. They didn't need more of those. They adjusted their scheduling protocols and the extra volume waned on purpose and revenue per hour went up. So, looking at a combination of schedule utilization rate, opportunities as a percentage of booked hours, appointment type splits by clinic. These are going to be the ways that you can actually answer this question as to whether your schedule is full and if it's the right kind of full to help you achieve your goals. Are my marketing dollars attracting the right patients or just volume? So I think we've probably all been through the experience where you run a marketing campaign and the phone rings off the hook and you book a bunch of appointments. But when you look back, only a small segment were actual confirmed opportunities. So this is where you could use something like new patient candidacy rate. Doesn't help to just keep spending more on marketing if you're not drawing the right types of patients into your practice. So being able to look at new patient candidacy rate by referral source can help you understand if your marketing strategy is the right one or if you need to divert resources in a different direction. And I think this is one where, especially if you've got providers working for you, you can often conflate this with a conversion problem because, hey, the phone rang off the hook. We didn't sell any hearing aids. This must be a problem with my providers converting. Maybe, or maybe it's a little further up the funnel and we actually didn't drive the right types of patients into the practice. Which of my referral channels are growing, which need attention. So this is one where you can look at your referral source mix over time, and I'll take a moment here in a bit to show you this. This is an incredible leading indicator, again, kind of getting out of that lag philosophy that we've had to rely on in the past. And again, I'll kind of show you how this one plays out in a case study coming up. Am I growing by finding new patients or by serving my existing one? As I mentioned early on here, I think this is a really important question for every single practice owner out there, given the trends that we're seeing market wide. Whether your practice is growing with new patients, growing with existing patients, both, neither, I can't answer. So this may or may not be applicable to you, but knowing what's happening market wide and the fact that generally speaking, this is an issue for most practices, I think is one of the most important things you can keep an eye on and understand, again, whether you're growing within your existing base or if you're growing your share of the market. And, no one number can kind of answer both of those questions for you. You need to have a combination of KPIs and analytics that you're looking at regularly to continue to answer that. Okay, so for this next section, what I wanted to do was walk through a couple actual case studies. So these are from real practices that use MVP. They have been anonymized so that you don't know who they are. And I'll kind of explain the story for each one and then talk about what the practice was able to learn by using BI and then what the results were. So, this one here that I'm going to start with is kind of the clearest example I have of the lagging visibility that we talked about a few times already. So, this is a historically very high performing practice, and they appeared to be off to a great start in 2025. So, between January 1st and March 1st, so the first couple months of last year, they were growing revenue over 13%. Units were growing 7.5%. ASP was up 6%. On the surface, the business looked like it was doing incredibly well. But using MVP, the practice identified a major warning sign that was hiding beneath the sales performance. And I know a lot of practices experienced something very similar at the start of last year. They felt like they were flying high coming out of Q4 here, and then things just really went soft at the beginning of 2025. So, what this practice didn't see while revenue was up 13% is that new patient appointments were down 13%. And that was hidden beneath, the normal reporting that they looked at, just on revenue and units and ASP. They weren't feeling the impact yet because there is some delay between new patient generation and, of course, the sale of hearing aid units or other services and revenue. But in the case of this practice, their pipeline was weakening rapidly. So this practice using MVP was able to recognize the trend early. They shifted their strategy. They doubled down on all of their existing patient nurturing initiatives. They optimized conversion for the patients they already had in the practice. And they did continue to experience new patient activity pressure throughout the year, but they were able to kind of stabilize and continue their growth despite having those broader market headwinds. So this I like to use as an illustration that this is like a genuinely forward-looking view. This is not telling you what happened. This is telling you what's going to happen potentially weeks and weeks before it actually shows up in your revenue numbers. Okay, this next case study is long established, urban practice, and they had noticed that their return rates were significantly higher than industry benchmarks, particularly on low-end technology. So using MVP, the owner identified that basic and entry-level technology carried nearly a 20% return rate, which is, as you guys probably know, pretty far above their own practice average and also the industry average. And the data showed that these fittings were consuming disproportionate provider time through follow-ups, adjustments, returns, which reduced schedule efficiency and revenue per hour. So this owner was able to share her findings with her staff, restructured incentives around premium technology fittings, was emphasizing both better patient outcomes and stronger provider productivity that come with more premium and advanced fittings. And as premium adoption increased in the practice, return rates declined and the overall business performed better. So they actually had 83% premium tech mix in 2025, up from closer to 60% in 2024. Their return rate went down from 20 to 13%, and saw major increases in revenue per hour, ASP, et cetera, as you would imagine from fitting more premium technology. So this was a powerful example of how MVP helped this practice connect technology mix directly to operational and business performance. So this practice, highly respected, strong reputation, established brand, very diverse clinical offerings, and they were really struggling to grow despite kind of overall looking like the business was performing fairly well. So using MVP, what the owner discovered was that the practice was dramatically underperforming when it came to existing patient upgrades. So this would be kind of the flip of what we've been talking about. So again, most practices struggling with new patient acquisition and living and dying on their existing patient database. Here's a practice that was, pretty much seeing the opposite. And back in 2023, their upgrade units were just 21% of their total private pay units. Depends who you talk to. Most practices are looking for something like 50-50 or 60-40 split between new patients and existing. So for a long established practice to only have 20% of their units coming from existing patients was quite low and revealed that the practice's patient database, represented a major opportunity. So this practice implemented a structured database upgrade program. They were identifying and re-engaging existing patients who were due for technology upgrades. and the impact was seen quickly. They had 24% growth in upgrade units in 2024, almost 100% growth in upgrade units in 2025, again, compounded on an already strong 2024. Incredible revenue growth. And as of April of this year, when I pulled this data, only 37% of the patients in their database were 3+ post their last sale or their last hearing aid fitting, whereas the benchmark in MVP is well over 40%. So it looks like their change in strategy towards how they nurture existing patients has worked, and they're seeing the outcomes in their business. Okay, this next case study is a growth-focused practice that had really ambitious goals, but lacked clarity around where they should focus operationally. They didn't know if they should focus on trying to drive more new patients or trying to increase ASPs or trying to improve conversion rates. And they worried that if they focused on all three at once, that would overwhelm their team and have them achieve nothing that they were after. So using MVP's opportunity value analytics, what this practice was able to identify was that conversion rate for them was the greatest immediate growth potential. So like many practices in 2025, they were struggling with new patient acquisition. It was like flat to slightly down year over year. And they were also, undergoing some kind of ASP pressure related to some shifts in their technology mix. So this meant for them, the clearest path to growth was to go ahead and try to work on, improving the number of opportunities that actually converted. They kind of realigned their operational and team focus around that, and growth in conversion rate became, the real primary driver of growth in 2025, and it's continued well into 2026. So they saw an almost 8% increase in conversion rate, and they're already seeing a 12% increase in conversion rate this year. So again, it'll depend on each practice, but in the case of this practice, they were able to really hone in on their greatest area of opportunity, rally their whole team around it, and see some incredible results by focusing on it. Side note on that, we're doing a webinar on conversion rate next week on Thursday, I believe it is. So if anybody's interested in that, I'm sure Kate can drop a link in the chat here if you want to go ahead and register if that's an area you think might be a growth opportunity for your practice. Okay, so this is another practice that appeared to be performing well. Its units had actually grown 27% in 2024, which is a pretty incredible number for an established practice. But they did notice using MVP that their revenue growth wasn't keeping pace. So their units were up 27%. Their revenue was only up 22% during the same period. So using MVP, they were able to identify that their ASP had declined by 1.7%, which I know that doesn't sound like a huge number, but given inflationary pressure that we're all facing as business owners, I don't think there's a lot of room to withstand top line declines these days. So even though the unit volume was growing, they were generating less revenue per fitting than before and kind of dragging down their overall performance. So they were able to hone in on ASP being the issue. They implemented some targeted pricing adjustments informed by MVP's retail pricing analysis tool, which I'll show you in a minute. And they were able to reverse the ASP decline and put the business back on a healthier growth trajectory. So since then, they've seen, I think something like close to 5% ASP growth here in 2026 year to date. Okay. This I think this is my final case study here. This was a long-standing high-end practice that had historically avoided anything that felt really salesy when it came to marketing to their existing patients, and they had built a strong reputation and a large patient database, but never really had a structured existing patient upgrade strategy. So using MVP's market share and database analytics, they discovered that they had nearly 20% market penetration within a 5-mile radius of the office, which it was really good for a practice of their size and in their market profile. But they only had 9% market share in both units and revenue. So if you have 20% penetration, I would expect to see roughly 20% market share ideally. So the fact that they only had 9% meant that while they had a large database, they were, dramatically underutilizing the long-term value of those patient relationships. So they implemented their first ever real true existing patient upgrade program, focusing on existing users and also tested not treated patients. And the results were pretty amazing. They had over 40% revenue growth in 2025, almost 50% growth in existing patient revenue that year, and 77% growth in existing patient units in 2025 as well. So, in the case of this specific practice, their greatest untapped opportunity was actually already inside the business, something they'd spent years building. They just needed the right flashlight to shine on it to know that this was where they needed to focus. So, all of these case studies and kind of theoretical business questions I've gone through so far, in none of these cases does a business necessarily need to work harder. They just needed to see something that wasn't already visible to them. So I wanted to tell you guys just a little bit about who we are. MVP has been around for, I think, 3.5 or so years now. And it was built, my family, we've been in the hearing care industry for 5 generations. We go back to 1934. My great-great-grandmother sold hearing aids in Santa Monica in the 1930s. Super passionate about audiology, hearing care, and particularly private practice. And we have a practice ourselves, and quite honestly, could not find a tool that would do what we needed it to do for us to successfully grow our business. And so we created MVP for ourselves, and in doing so, stumbled upon a pretty great need across the industry. Turns out all the other practice owners needed the same sort of thing to help them understand what was happening in their business. So it's been a really fun journey. And these are kind of the key things that MVP does. So we've talked about KPIs. These are strategic metrics that make sense in an audiology practice. They're going to be across financial things, schedule health things, patient mix, funnel and conversion. And it's going to just calculate all of those clearly and easily for you. Forecasting. So some of this leading indicator stuff we've been talking about, looking ahead at what's likely to happen so that you have time to react if you're not on track to hit your goals. Also a huge focus on goals. So MVP sets smart goals for your practice or can handle custom goals as well. And not only helps you set goals, hey, I want to do 5 million this year. Well, how are you actually going to get there? What are all the sub KPIs it's going to take to actually help you achieve those goals? Benchmarks. So being able to compare yourself to other practices in your region, nationally of a similar size, to understand your performance in a little bit of greater context outside of just your practice. A lot of focus on marketing analytics, of course, in a world where new patients are soft, understanding where your patients are coming from and how to be most efficient with your marketing efforts is more critical than ever. And then MVP insights. So this starts to get into some of the alerting, pattern detection, language-based synopses of what's happening in your business to help make the KPIs and analytics that you see here really attainable and in reach, even for the busiest practice owner. Okay, so I have a few minutes here. I thought what I would do is pull up MVP. Let me just share my screen here. And I'm going to keep this pretty short and sweet. It generally takes somewhere between, at least 30 minutes to do a full demo of MVP. So I certainly don't have that right now. I'm just going to spend a few minutes showing you some of the highlights. So this is MVP. It integrates with all of the audiology office management systems. So chances are whatever system you're using today, we integrate with. This is not a replacement for your office management system. This is an added layer that takes the tremendous amount of data that you're generating, even if you don't realize it, by running your practice every day and seeing patients and scheduling appointments and invoicing hearing aids and services, and it turns it into actionable insights about your business. So this is what you see when you log in. It's updated every single night automatically. Once we're connected, there is nothing that you, your staff, anybody has to do. This just runs. So this is going to give you a high-level overview of your business. There's the ability to drill down if you want to get a summary of what happened last week or what happened yesterday. And you'll get to see a few of the types of things that I mentioned in the presentation, but putting your performance into context. So is this better or worse than an average week for you? Well, it was good from a pipeline standpoint, not so good from a sales standpoint, as I'm looking at, just the numbers here on the screen. We also have, this is one of the MVP insights features I mentioned where we do pattern detection. So, this practice's revenue's been down for a 6-week streak below baseline. Okay, so sales have been soft for 6 weeks. Now pipeline's growing 3 weeks running. We would hope and expect this to turn around. If pipeline were also shrinking, this would be, me sounding the alarms as a practice owner that I need to get ahead of this trend. I mentioned forecasting, so being able to see, this is live, by the way, so there's not that much more to forecast for June. We're on the last day of the month, but at any point in the month, you can see where you're projected to end the current month, and more importantly, why. So This practice is having, at this point, definitely going to have a soft June. Had they been looking at this a couple weeks ago, they could have seen, is it coming from a lack of new patients? Is it a lack of opportunities? Is it the conversion rate is down? So not just what's likely to happen, but why is it likely to happen so that you can actually take action before you have a soft June. This is our patient flow module, and I mentioned pipeline, which to me is one of the most critical features in MVP. So again, this practice, if you'd looked at it, I don't know, this maybe a week or two ago, looks like their pipeline was about as low as it's been in the last 24 months. That is not great. It looks like it's rebounding a little bit. You can understand, is it rebounding on the existing patient side? Is it on the new patient side? To help give you some insights as to where you may need to focus your marketing and your efforts to ensure that sales don't follow suit. Or if your pipeline's high, to ensure that they do. This is our KPI center. So every KPI that's important in a hearing care practice grouped into different categories, again, to help you understand what's happening, giving you context of your performance over the prior period or last year. And I also mentioned drill down. So you have the ability to ask those questions of your data. So if your practice booking delay is 9 days, which by the way, booking delay is defined as the average amount of time between when an appointment is scheduled and when it actually transpires. You can see how this shakes out, across different clinics. Okay, so as a practice, we're at 9 days. I would say that's pretty good overall, but it's really going to depend on the clinic. Okay, Franklin can get people in 6 days, but yikes, Centerville, it's taking 15 days on average to get patients in. Let's check to see how it's affecting new patients versus existing patients. Maybe we don't care so much how long it's taking our existing patients to get in. They're going to come see us anyway. We're bundled. They come back to us for care and service. Okay, but it's taking new patients on average 12 days to get in. Let's look if that's different for opportunity appointment types versus non-opportunity appointment types. Of course, new patient opportunities are probably one of the most important things on your schedule. So in the case of this practice, it's taking 13 days to get new patient opportunities in. That's a little on the outer edge of what I would want as a practice owner. I want to make sure we're getting those high value opportunities in right away. So again, just to illustrate all the different ways you can drill into the data to get the answers you need to help you make the right business decisions. Here's a goals module. As I mentioned, MVP can actually set SMART goals for you based on your historical performance, the seasonality in your market, your practice profile, industry trends, or if you've set goals for yourself and enjoy doing that, we can simply load those in and then back into all the sub KPIs so that if you're not hitting your goal, let's find out why. Okay, so they're hitting their existing patient revenue goal. The miss is happening on the new patient side. We now have the insight we need to go do something about it. These can be set at the company level, the clinic level, the provider level, however you like to do it. We've got this hearing aid modules here, which will show you splits by technology level, manufacturer. We also have our retail pricing analysis where we bring in aggregated anonymized data from the rest of the data set to help you understand if your pricing is higher or lower than your peers, both at the tech level as well as down to the specific model name. And over here, you'll see top pricing recommendations. These are your opportunities to adjust your pricing to potentially generate more revenue. This is our marketing module where, again, understanding the difference between new patients scheduled versus actual opportunities scheduled, and where the true revenue and units are being generated in your practice, I think is critical. You may have one referral source that's driving tons of new patients, but if they're not converting for whatever reason, they may just be filling up your schedule and not actually helpful to the bottom line. So if this is my practice and I see that new patient appointments are down 8% year over year, I can come in here and in just a second, this will expand and it'll show me actually by referral source. So which of my referral sources are up year over year? These are in green, which are down. Okay, so my physician referrals are down 58%. Let's expand this. This is just a dummy clinic, so it's not going to have a bunch of physician names. But in theory, this would drop down the 50 physicians that refer to you, and you'd be able to quickly see which are up, which are down, which do I need to go call on and make sure I get those referrals going again. It's a database analyzer where you can understand the composition of your database. So how many of your patients are eligible for upgrade and how does that compare to the MVP data set? How many have you upgraded in the last 12 months and how does that compare to the MVP data set? How many of your hearing aid patients have you actually lost over the last year due to inactivity and how does that compare to the data set? So a lot of different ways to understand the health of your own database in real time. This is a monthly recap. This is built for team meetings or individual one-on-ones. I mean, it can be used just for your own information, or I love sharing this with a team. You can look at this for the whole company, or you could drill it down to an individual provider if you wanted to just show them their numbers. And this is a built for you way to sit down at the end of each completed month, or even during a month in progress, and show a provider, here's what's going well, here's what's not, and have a real conversation on areas where you may be able to better support them so that they can, increase their production. You're also able to see, I mentioned this before, not only how are you performing, but how is your momentum compared to the market. So you may be growing, but if you're growing slower than the market, that may not be where you want to be. Have an entire dedicated benchmarks module so you can see where your practice stacks up on all kinds of KPIs. And this is all controlled for the clinical hour. So you're being compared to practices of like size. And again, you can do this at either the national or the regional level. You can also do this at the company, clinic, or provider level as well. So you as a company may be rather strong, and you can then go in and evaluate each of your individual providers to see how they stack up. And finally, quickly, I'll show you our market share module. This is one of the most popular modules in MVP. You can anchor this around any of your existing clinics or any zip code. So even if you're looking at a market where you don't currently operate but are considering opening, buying a clinic, whatever, so you can, again, choose an existing clinic or choose any zip code in the country, and you can understand really quickly at a glance what your market share is within different mileage ranges and how your peers stack up. So in the case of this dummy clinic I'm in, they have 20% market share within 5 miles. They're the average practice within 5 miles that's in this type of market, which in this case is maybe like suburban or semi-urban, would have 5%. So this is an extremely strong clinic. And it may be that that's true of your Madison clinic, but when you come to your Centerville clinic, maybe you're much weaker. Yes, you can see that here. So for this clinic, they have 3.8%, but an average practice would have 4.7. And again, this is all custom to the type of market it is. We know that a clinic operating in Brooklyn is going to be entirely different than a clinic operating in, rural Montana. So all kinds of cool things you can see here. You're able to see your competition. You're able to see their Google review listings, so you can kind of understand the strength of competition in any market that you operate in or may consider operating in. You can see not just your current market share, but how your market share is changing over time. So maybe you're happy with 20%, but if the market's growing, then you'd like to see your market share growing, I assume. So all kinds of cool analytics here for understanding your place in the market and where the opportunity is for you to grow. So I am going to hop back to my slides for just a second here. Let me just make sure this is working. Okay, great. Hopefully you guys can see my slides now. So yeah, with just the remaining bit of time that we have here, I just wanted to kind of summarize what you get when you use a business intelligence tool like MVP. So one is you get time back. I mean, even if you're only looking at reports monthly or whatever it is, I mean, it takes time to pull those reports and do analysis on them. That goes away. It's all done for you. It's ready instantaneously at all time. The confidence with which you can make decisions when you're using a BI tool will blow you away. So if you've been making decisions based on antiquated reporting, gut instinct, emotions, all the things that we as humans make decisions based on all the time, you are going to feel so empowered when you're making decisions based on what's actually happening in the data in real time. You're going to catch things so much earlier. You're going to be able to capitalize on opportunities both within your walls and outside of them. It's going to make your practice more valuable. We just launched a new claim, but practices using MVP sold 5 times as many hearing aids or grew 5 times more in terms of hearing aid sales than the commercial market in 2025. So all of these things, understanding the opportunities, taking advantage of them, increasing your production, it's going to make your practice more valuable. And if you're like most owners in this space, this is one of your most valuable assets. And so anything you can do to make it more valuable will come back to you in literal multiples when it comes time for you to exit. You're going to be able to better manage your team by understanding exactly at granular level what's happening in each of your clinics with each of your providers. And you're not going to be surprised by anything. You're going to know way before anything happens that it's happening, and you're going to have time to react. I wanted to just quickly close by mentioning our partnership with Resound Accelerate, because they were kind enough to co-host this event with us. Any Resound Accelerate members do get a discount on MVP, and you also can use your flex points to pay for MVP. So this can essentially cost you nothing out of pocket. I would encourage anybody who's interested to schedule a personalized demo of MVP. I've got a QR code up on the screen here. I'll leave it up for a second before I break for Q&A. I know Kate can probably drop the link in the chat as well so that you can access it during the Q&A. I showed you like 10% maybe of MVP during that flyby demo. There's so much we can show you. And it's always great to have a conversation to understand more about your practice, your market, what you're looking for, and start to identify where your opportunities are. So with that, I want to thank everyone for joining. I think there is a question or two, so I'll take a look at that. And then if you have a question and you haven't asked it yet, please feel free to drop it in the chat now. Okay, so this question is about making appointments before a patient leaves versus on demand. Is a hybrid recommended at all? Setting reminders in the appointment system when a patient checks out and send a reminder to patients so patients aren't lost to care. Yeah, I think that's a great point. And again, I almost hesitated to tell that story because my point is not to talk about what is the right strategy, because I really think it depends. I mean, if you are not a super busy, super booked out clinic, I do think there's merit in making sure patients leave your office with an appointment on the schedule. However, if you're completely booked and you have 3 fitting rooms and your practice is open Monday through Saturday, 8 a.m. to 6 p.m., and you simply don't have bandwidth to add more at this time, then potentially not pre-booking appointments might be the right decision for your practice. And I just think it illustrates really well that the questions you guys have about your business, they're not basic. They are complicated and they are complex. And you need good data and a tool to help you leverage that data in order to answer them. This is not a one-size-fits-all business. So I think it really depends. I love the idea of a hybrid where you pre-book and then you also go through with some kind of automated system to catch patients, because I don't care how good you are. If every single patient leaves with an appointment, some people are going to fall through the cracks. They are going to be on vacation and cancel and tell you they're going to call and reschedule, and they don't, right? It's just going to happen. So I definitely like the idea of a 2-pronged system for a lot of practices. Yeah. All right. Let me know if there's any other questions. Otherwise, I do want to thank everyone so much for being here. Really appreciate it. I hope it was useful, and I hope everyone has a great rest of their day, and see you soon. Take care.